Hello, Scott Bennett here, founder of Invest with Rules, investment research newsletter, and IWR Advisors, a professionally managed money solution. And what I'm really excited to do today is share with you a little bit behind the curtain of what's going on with Invest with Rules and what members get twice a week, plus a whole lot of research. I want to share this with you primarily because the market's at a really important juncture, and I really want to make sure you have good research and you know where to get it. And then if you wanted more of it, I do offer a 30-day free trial. So I want to make this as politely irresistible and a grand slam offer for you if it's something you're interested in. So let's dive into today's market update. Here we go. Okay, so today is Wednesday, February 21st. I hope you're doing really well. It's the midweek update, as this is what members get. It's a little bit tailored, and I'm going to give you a lot today, so I hope it really helps with your overall process. So topic number one, I'm going to cover the difference between a 13F report. What is that versus what Invest with Rules delivers in regards to stock research? I'm going to give you market trends and my personal watch list. Before we do, I need to share with you just a really quick disclosure. I don't know your financial situation. I don't know your risk tolerance. There's a lot that I don't know. So this is just information. It is not a direct solicitation to go buy or sell anything. Please always filter it through your financial plan, your risk tolerance. Always manage risk. We always manage risk using rules. Okay. Every week I look at macro headlines, but the main macro picture focusing on interest rates, geopolitical risks, inflation, jobs, and contagion, mainly because this is what's going to move the market. And what's moving the market a little bit today is interest rates continue to climb, which is really pulling back in regards to the mortgage rates, or mortgage demand and interest, as well as refinancing. So as the conventional 30-year fixed term on your home is now over 7%. So a little scary to pick up a new mortgage or to refinance, doubled from just a few years ago. The demand for refinancing and the demand for taking out a mortgage has dropped just between 11 and 10% just from this week to last week. So not a great sign for the overall economy, but at Invest with Rules, we follow the trend. We follow big money and we follow rules. As much as the macro is important and it's very interesting, why not just follow the trend? Because the macro picture can be early, it can be late, and it can be tricky. So this is what's available on the live spreadsheet, available every single trading day for members in the members area of Invest with Rules. So you have the date, you have what's called the market health score. And very simply, a very strong uptrend is a 1 out of 1. A very strong downtrend is in red is a 9 out of a possible score of 9. We're still in a really strong uptrend. So I want to be clear that the market, I know, is at a very important juncture, which we'll talk about in a moment, but the market is still really in a strong uptrend. So I want to make sure that's clear. Every day I analyze the four major asset classes plus the sectors in regards to what's the strongest off to the right and what's now the weakest, and how does that affect us and our portfolio, and how does it affect you? So what's acting very strong off to the far right is healthcare and industrials and international. So despite in the headline news is we have slowdowns in Europe and slowdowns in Japan and slowdowns all over the place, they're actually acting really strong comparative to the US market now. And all the way to the left, you see tech is pulling back, real estate, small cap. So I'm watching that very closely in regards to the trend. So I hope that's helpful. Gas signals, coast signals, brake signals, we factor all of this into our decision making. So level one is what I call the all-weather portfolio. It's a go anywhere trend following ETF portfolio. It takes the least amount of time to implement. A lot of our members just simply follow this, and the results have been pretty stellar. Very important. So the major asset classes, they're on coast signals. So for the S&P, the NASDAQ small cap, they're on coast. Interestingly enough, international is still on a gas signal, and we make all of our decisions at the end of the trading day before the close. So that's when we make our decisions. This particular portfolio trades the least, and off to the far right, you can see what the P&L is in regards to that. I am blurring out the holding percentages, just I want to be fair to those that are paid members. And if you want that, obviously you can take a 30-day free trial and check that out. So this is updated daily, typically twice a day. Hedging. Hedging is a strategy. Well, don't get me wrong, cash is a strategy during really difficult downtrends, but hedging gives you the ability to protect, and it also gives you the ability to potentially profit in down markets like 2022. So at the moment, they're all on U-turns or break signals. And very simply, a break signal is not that great, but a U-turn simply means is mathematically, statistically, the downtrend might be over. So there's some cracks under the surface of the stock markets. I want to be really clear about that. Let's zoom into the S&P 500. So the S&P has been in a really interestingly red channel, bouncing up and down since November of last year. It had one really difficult shakeout, and that goes all the way back to 2023. So it's been in this interesting kind of bottoming formation and off we go. But we're at the top of the channel. In darker red, I drew a trend line support. We're at a really interesting juncture where this market could rip higher on Nvidia's earnings tonight, or it could fall apart, and we're simply going to follow the trend. And there's nothing wrong with buying and holding if that's part of your process, but you have to deal with volatility. You have to deal with anxiety and large drawdowns. What we do at Invest with Rules, our number one foundation is we follow the trend. So if it does break and will move lower, we have a process to play defense. And if it keeps going up, then we continue to hold or potentially add to our positions. So if you want, at absolutely no cost to you, no obligation, if you just want the S&P 500 trend roadmap, so those gas, coast, break, U-turn signals, just go to investwithrules.com/trend roadmap. Put your name and email in, and you can access this every single day. It updates daily. Just hit refresh. It's the trend roadmap. It's my certainly way of just trying to be helpful to you and your family in regards to the trend of the overall market. Again, that was investwithrules.com/trend roadmap, all one word. Okay, so under the hood. Under the hood right now, you have break signals on Microsoft, Apple, and Google. That's not good. You have coast signals everywhere else. And so overall, that's why the trend of the market is on a coast, because there's not a lot that's kind of telling you to hit the gas and be more adventurous at the moment. It's telling you to be cautious and to not do too much. So if we move to international, they broke up and out. They bottomed at kind of the end of 2022. They've been climbing and chopping. But what's interesting is they're looking strong, and they're actually gaining relative strength. So international markets, or all international minus US, should be on your radar. They've been very unproductive the last decade, but there's something going on. So I just want to be clear that that's what I'm watching. This is the Trend Finder portfolio, having a really, really great year so far. But the Trend Finder portfolio invests in 10 ETFs, typically 5 are sector, 5 are non-sector, and we add and subtract exposure based upon the trend. So that's really what it's up to. You can kind of see our holdings, and off to the far right are the gains. So far, we're doing pretty stellar there on the gains. But there's some warning signs in tech. So I'm just being cautious in regards to minimizing positions, and I act in the afternoon. So in regards to XLK, or the technology sector, which is really heavily weighted by Microsoft and Apple, if you remember, both on break signals, this is now on a break signal. So we have a process to play defense. So that's concerning, and that's what I want for members, is to know that something doesn't look perfect at the moment. You can kind of see that as much as the market's telling you to avoid international, Japan's doing quite well. We just recently started a position in China Internet, off to a good start today. Pullbacks are in Bitcoin, pullbacks are in semiconductors. Watching everything closely. Everything is based on math and trend, not my opinion. Every day I give members ideas. These are gas signals sorted by relative strength, weakness to strength, because we want to see what could be the next big exponential mover. And what's interesting, the major themes to me are precious metals. There's palladium, there's silver, energy, international. So I hope that's really clear. That's what the market is telling you that is on gas signals. So palladium, maybe the bottom's in. There's your undercut that happened in February. Silver is finding support, finding kind of bottom ground here. I'm trying to share with you ideas that haven't already broken out, that you're late to. I'm trying to get you to the skate to the puck before everyone else. So silver is kind of very interesting back on my radar. I don't trade volatility, but That's not a good sign. If volatility is on a gas signal, that means that the market is under some pressure. So volatility on the S&P is picking up, volume's picking up, so not a great sign. And then finally, what's going to potentially come and break out of this channel and break up and out over 300 is OIH, or oil services, something for your radar in regards to, as much as that people tell you that energy is over and precious metals are over and international is over, this is what's on the market today. This is what's on gas signals, so very attractive. I want to share with you some past performance that's not indicative of future performance, but the all-weather portfolio has done extraordinarily well since 2022. And why? Because it plays a lot of defense in bad markets. So overall, you can kind of see the growth of $10,000. You can see the trend finder portfolio is having its footing so far this year, but these are all comparative to the S&P, which is not nearly the amount of risk we're taking, comparative to bonds, comparative to a 60-40 mix. These strategies are all doing quite well in regards to the benchmarks. I want to share with you a segment. So 13F reports are reports by the SEC mandated. Anyone who manages over $100 million needs to report their holdings at the end of the quarter. And then 45 days later, you have to share what you owned. So our famous Warren Buffett, what did he do? So we know at the end of December 31st of 2023, it's 45 days after the quarter, so mid-February, we know that his largest position, he actually sold some Apple. He has a big position in Bank of America and American Express and Coca-Cola and Chevron he added to. But what did he take away from? He really sold down HP, HPQ. He sold down Paramount. Here are the other tickers he sold down. He added to SiriusXM. He added to Chevron. So this was, again, end of December. You got this in February. So how does this comparative to the Invest with Rules process? So Invest with Rules on December 31st, we got about $1 trillion worth of data, and I delivered that to members on January 31st. So that's about 15 days ahead of the curve. Now, I don't know exactly what Warren Buffett was doing, so I look at other funds, other billion-dollar funds, and I'm sharing that 30 days lag ethically. So normally, so when you don't go at the end of the quarter, so at worst, our data is 15 days ahead, and our data is on about $1 trillion, not all the market, but it's a large amount that can really show some colors of what's going on under the hood. So at the end of January, so just in perspective, how does the Invest with Rules data come out to members? They get it on February 29th, or the end of February. It's kind of the mission. But when will you find out what Warren Buffett did at the end of March? The answer is you won't know until mid-May. So this is where we could be also 2.5 months ahead of the curve with the Invest with Rules data. So what were the funds doing in February? So at the end of December, which members got this in January, what were they buying? And the answer is I grade it from A, B, and C. A is top accumulation, B is strong accumulation, C is moderate accumulation. What's really interesting is Ralph Lauren so far this month, Ralph Lauren is up almost 28%. It's kind of wild, right? Yum China up about almost 20%, 19.5%. Then you have Cloudflare, which you're probably familiar with, Facebook or Meta. Discover Financial. How did they know? It got just bought out. So it got bought out by Capital One. So how did these fund managers know? They knew something, maybe that the worst was over. You can kind of see all these tickers. I focus on the gas signals, but this is available to members as a really powerhouse all-star watch list. So Yum China. I know it's done well over this month, but you finally broke out over the channel, and maybe you're headed a little bit higher. Obviously, manage risk, but something's going on there. This is the billion-dollar fund manager stock portfolio. Again, I didn't share the holdings or the percentages to the holdings, but this is what they are today. They will always change tomorrow, and I always manage risk. If they do well, and they are doing extraordinarily well, I call them a road tripper. I loosen my stops, but I'm always observing risk. So right now, we have a couple road trippers. We have Boston Scientific up over 25%. We have Intuitive Surgical up 28%. We have TJX up 50%. We have some high flyers too. I mean, small losses, big winners is the overall mission. So We are looking to we'll look at de-risking some Datadog, and Intuitive Surgical is just in full disclosure, is already de-risked. We're excited to add if we get another opportunity. And then IoT. Large funds are buying IoT, Samsara, which is the Internet of Things. It's a tech stock. It's getting close to breaking my risk alert. So we always follow risk management rules. There will be losses. Everyone has losses. It's following the process, is judging the process, not the resulting of each position. Because over long periods of time, by having a process, by having these larger winners and smaller losses, we will get ahead and we will be successful. So what's on our watch list today? It's really defensive. What's on gas signals? Philip Van Hughes has already made a really large run. Wells Fargo is on this high octane comparative to previous earnings reports. Look at that. It's great. I mean, who'd have thought? So this is what the funds were up to. There are no IPOs this week. Bristol Myers Squibb finding its footing, finding a floor back on a gas signal. Shell, again, in a little bit of a range. Energy is the theme, finding its footing. CVS trading in a really tight kind of bound range. And then finally, what was Uncle Warren buying? He was buying Chevron. He made that bottom of the base, and now it's breaking up and out. So again, Performance Foods, Dollar General, Procter & Gamble, the market's telling you, whether you want to hear it or not, that it's shifting, it's rotating, and it's getting more defensive. And this is part of the value of Invest with Rules, is can we deliver returns like the S&P? If you combine the strategies, can you do better while taking less risk? So that's kind of the overall mission. And I track everything very religiously in a transparent manner because I really want, this is what I'm up to, but I want you to do well. And I think overall, if you have a process and you follow rules, then the next bear market won't be as of a sting for you and your family. So first, thank you for your time. If you are interested in the 30-day free trial, go to investwithrules.com, click the Get New Rules button, and that will go over just a quick video of how I do everything, what you will get, and how to start your 30-day free trial. So again, thank you for your time, and I really hope this was helpful as the market's in this really important juncture. And we'll find out how the rest of earnings season goes. But I'd love you to be a member, and I'd love you to be a part of this journey with me. So again, enjoy the rest of your day, and I look forward to seeing you in the Invest with Rules Inner Circle membership. Have a great day. Bye-bye.